How much deposit do I need to buy a property here in New Zealand? Let's go. We're going to go through three things today. We're going to talk about the general rules or guidelines for how much deposit you need. We're going to do a pop quiz to make sure you've been paying attention. Then we're going to break some of those rules. Now, it's important to note that the amount of deposit you need depends on the sort of buyer you are. Are you a first home buyer, an owner-occupier, or a property investor? The amount you need all differs. Now, the reason behind that is the Reserve Bank has introduced LVR restrictions, which they change from time to time. And this sets out how much each bank is allowed to lend to these different types of borrowers with some minimum deposit requirements. Now, let's start by talking about the owner-occupiers because you guys have the simplest rules. Now, just so we're clear, an owner-occupier is someone who owns a property already and wants to buy their next home to live in. How much deposit do they need? 20% as a minimum. So if you want to buy $1 million property, 20% deposit, 200K is what you're going to need. Now, there are some ways to borrow outside of this, but it's important to note that over the last year, less than 1 in 50 owner-occupiers bought a house with less than a 20% deposit. Now, let's talk about you property investors. Now, that's people who are buying a property for a tenant to live in. How much deposit do you need? 20% if it's a new build, 40% if it's an existing property, and very little lending falls outside of this. So if it's $1 million new build, 20% deposit, 200K is what you need. If it's $1 million existing property, 40% deposit, you're gonna need double, 400K as a minimum. Now, you first home buyers get a little bit more complicated. You're people who don't own any property just yet and are buying for you to specifically live in. Now, if you're buying a new build, about 10 to 20% is what you're going to need. Existing property, 20%. But what is important to note is that some lending falls outside of this. So if you borrow with less than a 20% deposit, you're what we call a low deposit borrower. And you first home buyers have had the run of the mill over the last couple of years getting most of those low deposit loans. Take a look at the data. Between 2014 and 2022, somewhere between 20 and 40% of first home buyers have borrowed with a lower deposit, less than 20%. But look what happened since November 2021. Well, the LVR restrictions tightened and the amount of first home buyers who are borrowing with those low deposits went from the high 30% down to about 20%. Now, what's important to note is that if you are one of those 1 in 5 first home buyers who are using a lower deposit, you are going to pay a higher interest rate. Let's go through an example. New build, $1 million purchase price, 10% deposit. What are you going to need? 100K. $1 million existing property, 20% deposit, 200K. Now that we've gone through the rules, let's do the pop quiz, see whether you've been paying attention. I'm going to show you 2 properties. You tell me how much deposit each of the 3 different buyer types are going to need. Here's an example of a 3-bedroom new build townhouse based in West Auckland. 860K is the purchase price. Owner-occupiers, how much are they going to need? Yep, 20%. What's that in dollars? 172K. What about for those investors? 20% again, 172K, same as the owner-occupier. What about if it was a first home buyer? 10% deposit, 86K is what they'd need. Okay, that was easy. Let's look at an existing property. This is a 3-bedroom standalone house, also based in South Auckland. $1.2 million is the purchase price. Owner-occupiers, how much are they going to need? 20% deposit again, 240K. Investors, it's double this time, 40%, 480K is the minimum deposit. And for the first home buyers, yep, you're right. It's the same as an owner-occupier, 20%, 240K most of the time. Now that we've gone through the rules and made sure that you've been paying attention, let's break them. And we're going to go through the 5 ways to buy with a lower deposit. Number 1, borrow outside of the LVR restrictions. Now, this is important and works for all 3 different borrower types because not every dollar that a bank lends out has to fall within the LVR restrictions. In fact, banks can lend up to 10% of their owner-occupier lending with less than a 20% deposit. And on top of that, banks can lend up to 5% of their investor lending outside of those LVR restrictions as well. Number 2 is to use the bank of mum and dad. Again, it works for all 3 different buyer types. Let's say you want to buy this house and you need a certain amount of deposit and you've already got some of it. Well, one way to get over that threshold is to borrow against the equity in your mum and dad or another family member's house. And through some sort of gift or arrangement, you're able to use that equity to get over the threshold. Number 3, and this only works for you first home buyers, is to use the First Home Partner Program. This is a government program and works very similar actually to the bank of mum and dad. You want to buy this house and have a certain amount of deposit but not enough. Well, that's where the government will put some money in with you and buy a share of your house. Now you do need to buy them out later, potentially at a higher price, and there are some terms and conditions, but it's a very worthwhile program to consider. Number 4 is to use a non-bank lender. Now, any type of borrower can do this, but I'm going to specifically focus on you investors. If you go to a main bank, you could borrow up to 80% against your own house and up to 60% for an existing investment property. But if you were to go to a non-bank lender, and I'm specifically talking about Resimax 80/80 product here, as long as you put your own home and your investment property with them, you can borrow up to 80% against each. And number 5 for you first home buyers is to use a first home loan. Now this is a government-backed loan where you can borrow with as little as a 5% deposit subject to bank approval, and of course there are some requirements there, but this loan specifically falls outside of those LVR restrictions. So we've talked about the general guidelines, we've made sure you're paying attention, and then we've broken those rules. Your next step, and this is really important, is to use a mortgage advisor, and that's for all 3 borrower types. And that's for 3 reasons really. 1, they're going to give you all of the different options that are out there on the market, all of the different financial products. They're going to help you select the right bank, and then they're going to help you break the rules. And I don't mean the bank rules, by the way. I mean the general guidelines we talked about earlier in this video. If you're looking for a recommendation, I always recommend Catalyst Financial. This is our sister company here at Opers, and they're in our offices. They're fantastic. But there are other quality mortgage brokers you can use as well. Now, what I want to know is, who is your favorite mortgage broker? Let me know down in the comments section below, and make sure you hit the subscribe and like buttons and toggle that little bell so you get notified about all our future videos.